Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question for Bill, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. So without any additional delay, here's the host of today's program, Bill Bullington.
Well, welcome back. Another fine week. Glad the RNC convention finally came here and went. Kind of interesting. Watch how that went. A lot of really interesting stuff. But I got to tell you, without that, there was actually no news. It was actually unbelievably slow last week. So I guess that's a good thing. The no news is good news kind of thing. But one thing I did think was kind of funny, just a random thought came to me. I was looking at Windstream Holdings. You know, it was a spinoff, one of the baby bells, one point in time. The stock had just gotten kiboshed over the past few years. And anyway, the stock is now approaching its 52-week high of $9.45. It was under $5 at one point in time. I bought some leaps on this right before they did a spinoff. And I bought some leaps on this about a year ago. And actually was it a year ago? Yeah, it was about a year ago. And that thing dropped by about 70% in value almost immediately. Well, now it's back up to the price I paid for it. And I still have a year left. Or actually, no, I have about 7 months left on the leap. And I thought that's pretty interesting. I'd already written that position off completely. When it drops 70% of its value, you're thinking, wow, okay, I guess I took a shot, didn't work out. Now all of a sudden, it's come all the way back and is on the verge of being profitable. And that's kind of funny. That's what a leap does. They're extremely volatile. And it's basically a bet. That's what you're doing. You're making a bet. So just a random thought just came to me out of the blue. I didn't put a lot of my money in. I never do that. You know, something like this that I know is extremely speculative, I'm just not willing to do that. I'm not willing to take a large percentage of my money, put it in that thing, and roll the dice, which makes me a little bit different. I know a lot of people have gone down that road before, and some people get lucky and others don't. And I just don't want to have to rely on luck. That's a big theme of investing. Don't rely on luck. If you're relying on luck, then you're probably going to be better off in the long run in just putting your money in the bank and forgetting about it. If you're going to, now, you need to put yourself in a position, incidentally, to get lucky. But putting yourself in a position to get lucky and relying on luck are two different things entirely. And I know a lot of people think that, no, you just said the same thing. Well, that's not true. When you rely on luck, you're going to take big positions. And if a big position goes against you, it's going to hurt you badly. If it goes in your favor, hey, yeah, you got lucky. When you put yourself in a position to get lucky, you buy lots of little positions. And collectively, if your winners offset your losers by more than your losers have lost, you've made some money. Now, you're going to have to go back to my website or go to iTunes to get the podcast to play that last sentence back to understand it more than likely. But you know what I'm talking about. Spread them out. Have a strategy that involves some diversification. You can overdo diversification, by the way, and I'd rather overdo the diversification than not have enough of it. It's one of those types of things. It is possible to be overly diversified, but if you are, the negative results are not nearly as strong as being under diversified. That's why it cracks me up about Kramer's show, 5 stocks. Are you diversified? 5 stocks? Are you kidding? No. I don't care what they are. You're not diversified with 5 stocks. And it used to be, when I was younger, I typically only held 8 to 10 stocks in a portfolio, in a stock portfolio. Imagine that. 8 to 10 stocks. I can't even imagine doing that now. Were we lucky? Not really. stocks, very few people invested in stocks back then. Only 15% of households had any money in stock. It was easier, quite frankly. It was a lot easier. Today, the numbers have reversed. 85% of the investors have some form of stocks, whether it's a mutual fund or individual stocks, an exchange-traded fund. So the numbers have flipped. It was only 15% of households invested in stocks back when I started in this industry. Now it's only 15% of households who don't have any stock in their investment portfolios. So it's a little bit different, is what I'm saying. There are more competitors. There are more funds now. The funds growth industry has grown exponentially. They like to split hairs and say, we're new. Well, you're not really new. There are no completely, well, I shouldn't say there are no. There are very, very, very few completely original thoughts on the planet. The chances of you having an original thought are around 7 billion to 1. You actually have a better chance. You have a better chance of winning the lottery than you do of having an original thought, which I find to be kind of funny. At first, I was kind of overwhelmed by that, thinking that hey, this is not good. But now I think that actually it is pretty good. But I've got to actually I'm going to go to the phones right now. I actually asked this caller to call in. We're going to be talking about. He's got a business opportunity for people, and his name is Daryl. I'm trying to pick up the phone here, and the phone's not working, so I'm not going to be able to pick that call up. Wow. So I guess we'll have to wait till the commercial break. My phone's not working. So, and let's see. Oh, there we go. Daryl, you there?
I'm here.
Hey.
You sound great this morning.
Oh, thanks. It took a long time to get you on the get you on the speaker here. But,
Seem very long over here at all.
No, that's good. You're going to call in and talk to us a little bit about the NutriSkis, the business opportunity.
Yeah. Okay.
Hey, go ahead.
But first, I wanted to ask you a question about the presidential candidates.
Yep.
We saw during the convention the stock market continuing to go up. Obviously, there doesn't seem to be any trepidation about the Republican candidate.
I just don't think anybody's paying attention, actually.
Yeah, I need you to get your crystal ball out
Yep.
and tell me which candidate is going to be better for my portfolio.
The one that gets in. The candidate that gets in, because the recovery, and I like Obama as a person. I really do. I think he's incredibly intelligent. I think he made, personally, this is my personal opinion, he didn't get cooperation from the Congress or the Senate, and it was his own doing. So, he made a mistake, and he just couldn't make up for that mistake. And so what we got was the slowest economic time period, even including the Depression. Think about that for a second. The Depression was a larger drop economically, but it was starting to recover more quickly than this one is. That's unreal to me. The fact that so many things, have not been done, they've not been acted on, and it's the fault of all of them. It's not just the president. He only has 1/3 of the vote. It's the Congress and Senate. So I would urge people to look really hard into their local reps and see how they voted. See what they did when they were in office. You can go online and you can check that stuff out. It's there. If you really feel like things are not going as well, this is the only way you have to voice your opinion, is go and find out. Find out how many times they voted, how many bills were in office, how many bills were proposed while they were in office that they didn't vote on. And it's unbelievable how lackadaisical that these guys are they're behaving. So you got to get things done. And I think that any change at this point is going to be a good change. I think things will speed up. It's not like
I get an email every week from an organization called Megavote that tells me how my U.S. representative and my 2 senators voted on issues that came up in the past week. And it's absolutely amazing to see how many times my U.S. representative does not vote.
Right. Now, I understand a lot of that because I see every bill that gets presented to the floor every day, and I'm telling you, there are a bunch of garbage bills that are there that are wasting the government's time. It's unreal. I'll start to pull some of those off and read them on the air. It's unreal that something like that would actually even come up for a vote. What the heck? This is one of the problems with having 10,000 people turn 62 every day. They have nothing else to do. They go out and suggest all these rules laws be passed that really have nothing to do with anything other than their own personal interests, and they send them to their congressman, and they're probably going to their local AARP meeting and say, "Hey, everybody, email." I'm kidding, but it's unbelievable the kind of stuff, the trivial stuff that comes up that they actually have to vote for. So a lot of it, I get it. I understand. Yeah. You want to name a highway after somebody, you want to pass an ordinance to do that. Okay. Can we find some other way of getting that done? Don't put that kind of stuff before Congress. Because it's just.
Yeah, we need to fix Congress first.
Yeah.
I don't believe the presidential office is as important as the media wants us to believe that
there's no way. It's got 1/3 of the vote. They get way too much credit, and they take way too much blame. The real work has to be done, but the three components of of our government have to work together, and I gotta believe that they'll work together a little faster under a new administration. I don't care who it is. I think it'll work a little faster than it has because it'd be really hard to beat these guys' record. These guys, I look at them, and I don't want to name names, but I hear them. I hear what they're saying. I watch while they're voting, and I'm telling you, we just need to clean house on these guys. If they don't get off the stick and start putting these things in, a lot of the projects have already been funded. They've already been approved. They've been funded. They have not released the funds and given the okay to do the work, and that to me that's inconceivable. Anybody that participated or did not vote on stuff like that, they should be gone. You want to stand in the way and be an obstructionist? That's what your motto is for good government? Then you need to be gone. And get somebody in there that will do something. And I don't care if they go left, go right, but just go. You can adjust along the way. Make your best effort. Don't be afraid to make a mistake. Everybody does. And you can defend a mistake, but defending not doing anything, which is what they've gotten away with. They've not done anything, and they've gotten away with it. So now they've set a precedent. That's a dangerous precedent to be setting for a government, to sit idle because, well, we get to keep our jobs, keep our benefits. These lobbyists keep, showering us with gifts and whatever. Probably shouldn't say that too loudly, but the bottom line is, you're there for a reason. You're trying to help us. If you're not going to help, then get out of the way. And unfortunately,
the problem.
Pardon me?
I was going to say the problem that I see is that most people don't even know who their congressperson is. I've gone on a personal campaign of asking people if they know who their U.S. representative is, and they look at me and go, what's his name? What's her name?
Yeah. Yeah, sure. I
we
understand.
need to fix Congress.
Right.
And expect the rest of the government to start to function normally.
Yeah, I think that will improve. There have been things that have been going on the internet to make a lot of this available. And what were you talking about? That's one I hadn't heard of before. You can check to see how your congressmen have been voting.
Oh, it's called Megavote.
Megavote. Okay, I'm going to check that out because
people just Google Megavote, and you can get on a weekly, like an e-newsletter that'll tell you how your Congress people voted. You punch in your address, and it gives you your U.S. representative, etc.
Cool. That's awesome. Mine is much more manually intense, but so I'll take a look at that and use both tools together. But anyway, speaking of getting things done, you and I talked in the past. Yep.
About helping people with supplementing their income. So many people that can't afford to retire.
Right.
And as you know, I'm involved with helping people set up small mini office outlets. that people work from their home computers. I work from with a company that's located in San Francisco that's been in business for about 60 years, and we get customers from the internet, and we don't have to go asking people in our circle of influence to buy things from us because we get customers from the internet. We have super high-quality health and wellness products. In fact, this company actually developed the first multiple vitamin in the United States way back in 1915.
Wow.
So, yeah, if people are interested in taking a look at that, there's no cost to look at it and evaluate, and we have an excellent training program. They can go to the website, and if I can give that address,
sure,
may I do that?
Yeah.
It's nutriskis.com, and I know that's a little bit difficult to understand. So it's NUT, like nut, RISKIS, nutriskis.com.
That sounds good. Well, hey, I'm actually going to have to run. I got to take a commercial break in a couple seconds here, and I got to get some announcements out. So,
hey, thanks for using our products and letting me tell other people about them. I appreciate it.
No problem.
You have a happy day.
Thanks. You too. Bye-bye. Actually, I needed to remind everybody, we do have a workshop coming up, and we're going to be talking about ways of generating income from your portfolio. There's some good ways. There's some ways that are not so good. People are finally starting to talk about it and write about it. That encourages me because an awful lot of people have been piling into fixed income bond funds, or fixed income bond. A bond fund is a fixed income fund. Fixed income emerging market funds. And that's been a leading category. People going outside the United States, and I'm pretty sure they don't realize that that's what they're doing. Let me tell you something. The only thing that drops faster than a 30-year government bond when interest rates go up, we'll come back to that in a little bit, but it drops really fast, by the way. The only thing that drops faster is a foreign bond, a bond from a country that's not in the United States. And right now, some of the yields on them are higher than they are in the United States. But that's because there's risk. You've got the credit risk of the country that you're dealing with. Remember when Russia defaulted? That's not very common, so it's typically not a huge risk, unless it's Greece. But that can happen. You also have interest rate risk. If interest rates go up, bond prices go down. So there's a third one. Now you've got a currency risk. You're increasing the risk by a third because it's not in the United States. I've only got about 60 seconds left, so I'm going to cut it there. Go to my website. We're going to talk about that more at the workshop that's coming up. The website is bullingtoncapital.com. You can see the seminar button there. Just click on it, and that'll be one of the topics that we're talking about at that workshop. This is very important. An awful lot of people are investing heavily in those areas through funds, and they don't understand what they're investing in. So you can avoid that risk. It's pretty easy. And there are some alternatives that are available to everybody that I think will probably help you out. I heard the music. That means I got to go. You're listening to Bill Bullington. I'll be right back after these messages. 1420 The Answers. Stay tuned.
When he tells me I better get in line, I can't hear what I can see clearly now. The rain is gone.
And we're back. That's a nice song. Hey, if you'd like to go to the seminar, we were talking about it right before the commercial break. It's actually called How to Generate More Income from Your Investments. And we're going to be taking a look at multiple ways of generating income through dividend-paying stocks, other sources of income you might not have considered. And again, we'll talk about the risks of some of the products that are the most popular right now. And generally, they're sold by people who really don't understand them. Who haven't seen a major cycle in something like this. But I've got a quick phone call. And if you'd like to call and ask a question, 216-901-0945 is the phone number here, 216-901-0945. And I got Jerry in Mayfield, got the latest report from General Motors. You had a question?
Good morning, William.
Hey,
yes. I know you're not big on GM, but...
Actually, I will tell you, I own that stock.
Oh, do you?
Yes, I do. It's in my dividend model right now. One of my dividend models. I actually have an aggressive one, and I have one that's not as aggressive. The aggressive one makes more money, or has made more money. You're not allowed to really say that. That sounds like a promise, but it's made more money, and it right now it's invested in GM. At one point in time, Ford was in there too. But so anyway, I don't really personally, would I be a long-term investor in GM if it weren't in one of my models? No, I wouldn't. Okay. But it met all the criteria that the model, and the model, by the way, the model has performed in the top 10% of all professional portfolio managers, and about the top 1% of individual money people managing their own money. So,
may I ask, how long have you been in it for? A short period, or
no? It's actually and it's easy to test, by the way. But I've been in it. It's about 5 years now, and so I've been pretty happy with it. I made one tweak to it, one minor tweak about 3 years ago. And at some point in time, I'm going to have to tweak it again. The basics have got to remain the same. I'm looking at the bigger companies in the world. I'm focusing on the top 500, and then I look at the 10 major sectors in the stock market, and I pick out the 4 with the highest yield at that particular moment in time. Now, there's an aggressive way of doing that, and there is a more conservative way of doing that, and I'm going to show both of those at the seminar. So I like.
When is that going to be?
That's August 13th. That's a Saturday morning, and it's 8 o'clock. So we're going to start. It's the corporate college over there, but I'll show you both and why I like the more aggressive one. But to me, it makes sense to have both of them. You will have overlap in that, by the way. So some stocks will show up in both of them.
Oh, really? Oh,
yep.
That's interesting.
Yeah.
Well, how about it? It just absolutely crushed the earnings. I mean, they doubled what the analysts were expecting.
That's not unusual. Analysts try to be conservative in their estimates most of the time, unless the company's paying them for their, like they did in the late 90s. Then they'll be, you spend enough money, they'll say anything.
That's slightly illegal, isn't it?
Yeah, it's like not just slightly; it's very illegal. And
that's what I thought.
Yeah, there's some, but that doesn't mean that. There's always somebody who thinks they're not going to get caught. I mean, it blows my mind that people don't realize that every time you turn your computer on and touch one of the keystrokes, it's actually being recorded. And I mean everything. There's a reason that the big facility in Utah is being built to store all this data, because there is nothing they won't be able to find lickety split. The amount of time it takes. By the way, they gather all the data from all the cameras that use the internet. Most of the wireless cameras, the security cameras, they're all internet-based, IP-based cameras. At some point in time, that will be the only thing out there. It records everything digitally. The problem is you've got this massive, massive amount of data, so it's hard to go through and find it. If they want to go after you specifically, they can pull you out. There are a number of different ways that they can get access to any of your information. So the government knows everything you're doing. The fact that they're not talking about that or not enforcing that is because a lot of that is actually illegal. Today, it's not even legal for the government, even though they might know that you're doing it and what you're doing because of the way they got the information. They can't prosecute you. They have to try to catch you in the act, which is significantly more difficult.
Okay. Getting back to GM, they were paying, a 4.5% dividend. It's earned twice what they analysts expected it to, and price earnings are still fairly low on it. They're significantly low. Does that mean the market just does not feel there's any long-term viability to growth in the company? Is that what I'm reading?
Yeah.
What's your opinion on that?
No, that's basically you hit it right on the head. They're not convinced. The analysts that are out there are not convinced, and they, in fact, the reason they aren't, by the way, if you go back, I pull up Y charts. It's a really good service. You can see their revenues. Going back, and you can go back for an extremely long time period, but revenues for GM, let's say in 2009, were $104 billion. And let me see. Before that, I don't know, I'm trying to, doggone it, they just changed this. You know what? This really kills me. These websites will change the data constantly. And they just made a change on here. No, I didn't get an email, nothing. So that just really bothers me when they make changes like this, because it was so much easier to pull up the data that I was looking for, and now they made a change, and now I have to go in and manually input the data, and it's still not what I'm asking for anyway, and then it's not giving it to me on the sheet that I'm looking at. So, you know what, guys? I'm gonna have to write them. And anyway, their revenues for a company like GM are going to fluctuate wildly, and I believe, and I'm going to have to check because, like I said, they've changed my access to the data, which really makes me upset. And I'm going to have to look up what the revenue was, but I'm pretty sure the revenue was close to where it is today about 10 years ago. And it had dropped significantly, and then it came back. So whatever a company like GM is incredibly difficult to gauge because of you've got to predict how many cars they're going to sell next year. And you've got to predict how many accidents they're going to have to pay for that were their fault. Okay. You know, everybody makes a big deal out of
recalls or whatever. Yeah.
And you're going to have to gauge the price of aluminum and steel because they use so much of it, and plastic, incidentally. And all the other components. I think the average car has somewhere around 5,000 pieces to it. So to really have an estimate of what they might get, good luck. Yeah, that's in that category that Warren Buffett calls too hard. It's too hard to do. If you do manage to come up with an estimate that's relatively accurate, it's not going to be skill. You will have gotten lucky.
What would it? Let me ask you, in your professional opinion, what would it take in order for the markets for GM to move in the markets? If this would, what would create a?
Well, now you'd have to go back and you would have to take a poll on all the analysts that follow this stock and anybody that could possibly sway the price movement and find out what they're all thinking. Now, last time I looked, there were 4,000 funds that had more than $1 billion in assets in them. Any one of those 4,000 funds can come in at 3:30, buy 10 million shares of GM, and move its share price up or down 5 or 10%. No sweat. Okay, so you have to go in and poll all those people. By the time you get your poll done, by the way, their opinions will probably have changed.
Yeah.
So that's why. That's why you got to have a method. So GM's revenue, the fact that it's a Fortune 500, the fact that it's in a consumer durable product, the fact that its dividend yield is in the top 4 in that industry, that's why I own it. Okay, when those criteria are no longer met, I won't own the stock. It's not buy and hold; it's buy and manage with a plan. You know, with a plan. You got to have a plan. And when you ask these types of questions, what do I think? Market doesn't really care what I think. You know, the market's a collection of all those thousands and thousands of portfolio managers out there that are all looking at the same data that we're looking at and making decisions. Sometimes they will tend to get overly pessimistic. How do you know that? Well, that's why I set up the dividend models, because when they're pessimistic about a company, share price goes down, they don't cut the dividend because the share price drops. There are a ton of novice investors who somehow think that the dividend and the share price are connected. They are not. The share price moves independently and moves significantly farther than the underlying fundamentals would dictate. And if it didn't work that way, then the index fund approach would be the exact correct thing to do for everybody. There would never be somebody who outperforms someone else, because stocks always behave like they're supposed to.
Okay. Would selling covered calls against GM be in part of your income portfolio?
I wouldn't do it personally, and I probably wouldn't recommend that most people do it. You know, GM did file for bankruptcy. So the people that were doing covered calls at that point in time, they lost all the money they had in GM stock.
Sure.
So I probably wouldn't on GM. I kind of like to take companies like Procter & Gamble or Hershey's. It's no longer private anymore, or public rather. I think they got bought out. But
Hershey's?
Yeah. Or if they didn't, there was rumblings on it that they might not exist one day. You know what? No, that was Heinz. I'm sorry.
I thought they rejected. They rejected the.
They did. You're right.
Offer.
Yeah.
Okay.
Yeah. So I look at this stuff. It was Heinz ketchup. They're gone.
Okay.
They're owned by some group out of Brazil, and Warren Buffett participated in that deal. So Heinz would be the type of company, or Hershey's would be the type of company, but if it's selling more than it should normally sell for, there is a range of normal. If you know what that range of normal is, and Hershey's is at the high end of the range, I'm not doing it. Sherwin-Williams, I love that company. That's a great company. It's at the high end of its range. I wouldn't be doing covered calls on that, because if it goes to the normal end of the lower end of the range, it's going to be down 40 or 50%. That's a big drop, and it takes years to get your money back. Selling covered calls, doing that. Could you do it? Yes, you could do it. You can do anything you want to, but
right. I'm just asking if that would be a recommendation. Would selling puts be something of interest in those stocks that you mentioned?
Well, if you really liked
like the stock, say for example, if you like Sherwin-Williams,
right.
Selling puts against it might be a good method.
Yeah, if you liked it and you didn't mind owning it or getting the stock put to you, then yeah, I think that's probably a good idea. And I bring that up because there are a lot of people here in the Cleveland area that work for Sherwin-Williams, and I talk to them fairly frequently. In fact, one of the former people that worked there is a good client of mine, and it's that stock languished for years, and all of a sudden, the last 3 years, everybody loves it. Nobody can get enough of it. And it's no longer undervalued. It's not hopelessly overpriced. It's just at the high end of its range, and the average range is around 50% for an average stock. And even the blue chip stocks, they have big movement, and that's the thing. That's the one thing that investors really have to prepare for, which nobody's doing that. Which, incidentally, I'm writing a little book. It's not a long book. It's a short book. It'll be an ebook. I've got the research for it done. So that aggressive dividend model I was talking about, I put all the data for every quarter over the last 10 years. So had you run this relatively simple screen and invested this way, it shows you exactly which stocks were in the portfolio and what they did for that particular quarter all the way for 10 years. That's 40 quarters. And it is eye-opening. When you look at that in that level of detail, some of the stocks that you see in there it's going to shock you. I promise you, it'll shock you, and it's a very good long-term strategy. But what happens is, people start to look at it, and you look at the end result. It kills me. And people, what's your 3, 5, and 10-year track record? Yeah, who cares? If you're down 50% at some point in time and you didn't expect that, you're not around to get the track record anyway. You're not there. So, and if you're going to be in stocks at some point in time, you're going to be down 50% or more. And you know who said that? You know who made that statement? Warren Buffett. Warren Buffett said, if you can't stand to see the value of your stocks drop by 50% or more, don't buy stocks. And the answer is not just to stay out of the stock market, by the way, because the interest rates are too low to be able to not be invested in the stock market. You have to be there now. Everybody has to be there. We're all investors now. There's no other place to go. So to limit the decline in your account value, you limit your exposure to the level that you think you can put up with it. Yeah. But,
okay, thank you, Bill. We'll see you on the 13th.
Okay, thanks. Have a good weekend.
Yeah, bye-bye.
Yeah, bye. And now as Jerry, he calls in a lot. That's good questions, really good questions. In fact, he led me through most of my script for my program today. I got about 60 seconds till commercial break. So, hey, if you want to call in, 216-901-0945, 216-901-0945, go to my website, bullingtoncapital.com, to sign up for the workshop. And I got to tell you, there are some really good things that are going to happen over the next 3-4 years. They should have happened by now. A lot of them have already been funded. When that money gets released into the general public, we're talking a couple $1 trillion here. I mean, it's a couple $1 trillion in public works projects. That money gets circulated throughout the economy. All the people that are working there drive cars, eat food, wear clothes, hopefully anyway. Yeah, brush their teeth. They're consumers, and they pay taxes. So you get a lot of economic growth that way. And that's really what's been missing. There have been too many obstructions to allow a lot of these things go through. And my hope is that doesn't matter which party gets in office, that they actually just speed it up a little bit. It doesn't need a lot. I mean, we're doing okay without it. You add that, then I think we're cooking with gas. But anyway, you're listening to Bill Bullington right here on 1420 The Answer. I'll be back right after these messages.
Deep inside of me.
And we're back. What did he say? You're listening to Bill Bullington here every Saturday morning, 11 to noon, 1420. The Answer. Been here for an extremely long time period. One of the oldest financial talk programs in the Cleveland area, which is kind of wild. Scares me, actually, every time I go in the bathroom in the morning. I look in the mirror. I think some old man broke into my house. Don't get old, folks. Anyway, a lot of fun. Feel free to come to the workshop. That's Saturday morning. That's August 13th. We're going to talk about generating income from your investments. The dividend model I was talking about is a little ebook I'm writing so that I can share this information. Everybody needs to know this. Looking behind the scenes, looking behind the curtain is extremely helpful for understanding just how stock market returns are achieved. The vast majority of people don't understand it because it's not being disclosed. It's not because you can't understand it. It's because it's not being disclosed. So I am pulling the curtain back. I'm showing you one of the better strategies I know of. And I'm going to show you exactly how that thing works on a quarter by quarter basis. Study the material if you decide to get the book. Study it. It's going to help you. You will be surprised. You'll be surprised by how little the overall portfolio value dropped in a quarter where it looked like almost everything was down. You'll be surprised by how fast stocks can recover. I know you will. And when you look at the averages, well, that's actually how you get the average rate of return that is achieved by people who are doing things that are similar to this. So, and avoiding it is not the answer. You can't do that anymore. And it's unfortunate. I wish we had 5 and 6% CDs, because then for a lot of my clients, I could put the money in there, at least a good portion of the money in there, and we wouldn't have to worry about it. Well, that's not the cards that we've been dealt. Okay, those aren't the cards that we've been dealt, and it's not all that bad. It's not as bad as you think it might be. In fact, I think it's pretty good. I think the chances going forward are really good. I'm going to take a real quick phone call here. Don't really know who this is. You're on the Bullington Capital Report.
Hey, so yeah, Bill, I was just looking at my dad's account, and I was noticing that some of the Momentum, I think,
right,
got sold, and then he bought. Or I'm sorry, yeah, the ETF Momentum got sold, and he bought some more of the high dividend.
Yes.
I didn't know if you were changing your
the allocations
or weights.
Yep. That's part of the Department of Labor rules came in, and they are affecting how we're allowed to manage money without getting in trouble for it. And since I'm being audited tomorrow, or on Monday rather, I'm having my annual audit, or actually they come in biannually now, but they're going to look at that sort of thing. And they really, what it's caused us to do is to have to overweight large cap stocks. So if I'm going to overweight large cap U.S. companies, that's what they consider a prudent thing to do. And I'm not going to argue with them. I just going to use my high dividend amount, which I like a lot. It's done very well.
I figured it was doing better, so you were overweighting it because of that.
Well, I got to tell you, if GDP growth doesn't get back up above 3%, it'll probably continue to outperform the other models. In that environment, momentum investing does not do very well. The only thing that does well during relatively low economic growth is a value-oriented strategy, and you still have to stay on top of the stocks because they do move up and down quite a bit in a given year, and that's what the high dividend model is trying to take advantage of. When a stock crashes, stocks go. All the energy stocks were getting killed last year, and every quarter it was buying a little bit more, just incrementally, just increasing it. So when the oil prices rebounded this year, and that sector took off. It was wild actually to watch that. I've seen that stuff happen before, but and the one thing that I didn't really fully comprehend or appreciate until I started doing this a few years ago. I mean, I've known about these strategies my entire career, but you never had a period where I never had to live through a period of more than 3 or 4 years where momentum didn't take back off again. Well, that stopped after 2007. Actually, you've only had 1 or 2 brief time periods that didn't even last a year, and when it did, of course, the momentum model skyrocketed. But the rest of the time, it's just struggled. So, and going back,
a couple of years ago when it had that real big year, huh?
Yeah, yep. And since then, it struggled. Last year, because it's all small and mid-cap stocks anyway, last year the small and mid-cap index was down 25% at one point in time. And so was that strategy if you measured from the peak to the trough, which, I'm one of the few people that does that, by the way. But I like to know what the real damage was. But, so unless we get GDP growth that comes back, is better than average, and that's typically what happened. You have the cycles were a lot shorter, and they were more frequently being displayed up until the last 15 to 20 years. Cycles started getting longer I guess that's kind of cyclical too, now that I think about it. But anyway, unless we've got real fast economic growth, your momentum-based models typically don't do as well. When the economy does get to kick in, if they start spending some of the money they've already got allocated for the repair of the bridges and the highways in the country, if they start spending some of the money for the utilities to upgrade and modernize, just those 2 industries alone could push GDP growth back up above 3% by themselves. So you don't even need the housing, you don't need automobiles, you don't need discretionary or non-discretionary spending. All the other categories will be lifted by the things that will be going on in just those 2. So if we get some of the other areas to participate, you could have another 1980s on your hand. That'd be awesome. And the thing that really makes me think that might happen is that the level of I don't know what you want to call it, I guess pessimism is really, really high. People are extremely pessimistic, and that's what you need to begin a big move in the markets. You need people that don't believe it. That way, when it starts to go, they're still hesitant. By the time it's nearly over, when they're ebullient about it and optimistic, that's when you should be increasing the exposure to the lower risk side of your portfolio. So, and you will see that, by the way, too. If that ever happens again, the way that it did in 1999 and 2000, I will be holding a lot more short-term fixed income and a lot less stock. So, but we're not there yet.
Okay. Hey, Bill, could I really quickly plug an open house I'm doing tomorrow?
Sure.
It's my own personal condo. I bought it and renovated it.
Oh, cool.
So it's 11820 Edgewater, and that's in Lakewood on the Gold Coast. And it's 3 bedroom, 3 full bath with lake views. And it's just $99,500. It's all updated and renovated, quartz countertop, all new cabinets, stainless steel appliances, all that.
Wow.
And it's got lake views.
Awesome.
And it's about 1,640 feet.
Okay.
So it's good size.
So what is
and I'll be there tomorrow from 1 to 4.
And what's the address one more time?
It's 11820 Edgewater Drive.
Okay, so can they find that on a website, on a real estate site somewhere too?
Oh yeah, it's on trulyazil.howardhanna.com, all of them.
Okay.
It's Unit 217, but there'll be a sign and somebody greeting them in the lobby too, my assistant.
Okay. Awesome. That's cool. Well, good luck with that.
Thanks, Bill. Appreciate it.
Thanks for calling. Yeah.
Yep. Talk to you. Bye.
Yeah, no problem. Actually, Brian's a good guy. He's got a condo for sale on the Gold Coast. $99,000. You know how difficult that would not exist in. I don't think you can. Yeah, actually, I think that's what a parking space costs in New York City. About $100,000. And that's not for a good one. So, wow. This part of the country, that was one of the good benefits, I think, of the having the RNC convention here. People got to see that Cleveland is not what they think it was. The impression I get from most people when I travel outside the companies, they still remember the Rust Belt. They still remember the river that caught on fire. Oh, yeah, wasn't that place where the river? yeah, that is. But I travel all over the place, and I really like Northeast Ohio a lot. Best bang for your buck here. Of course, I like the seasons. I like the change of seasons, and I like the wintertime. So it's perfect for me. And when you look at the cost, the value per dollar for what you get in real estate here, it's pretty amazing relative to other major cities. So anyway, thanks for listening, everybody. I think I only got a couple minutes here left, so I will talk about the seminar one last time. You can go to my website, sign up for it, bullingtoncapital.com. You can always call me. 330-664-0700 is our office number. This show will air again. It's posted on my website and on iTunes, so if you want to catch it on iTunes as a podcast, just type in Bullington Capital in the search function there, and it'll come up. Feel free to reach out and contact us any way you see fit. And, hopefully we'll see some of you guys at that seminar coming up here. Email me with questions, too. If there are things that you'd like me to talk about on a radio show, I'd be glad to try to address those to the best of my ability. And thanks for listening. I'm here every Saturday morning from 11 o'clock to noon, 1420 The Answer. WHK's been around for a long time. It's a great station. It's owned by Salem Communications, by the way. The show re-airs tomorrow night at 1220 at 6 o'clock as well. So if there's something that you missed and you don't have access to a computer, that's a 50,000-watt station. And at night, other stations have to power down. So it goes really far across the country. You can pick that up anywhere you'd like. And so I've been told I have about 20 more seconds. So I guess I'm just going to say have a good week, everybody. Good luck. Good investing. Keep your chins up because economy's been growing really slow for a very long time, and that reversion to the mean means at some point in time the growth rate's going to start to pick up. When it does, we'll probably all be much happier. Anyways, I hear the music. That is the end of the show. Have a good week. I'll talk to you next week.
You just caught another episode of the Bullington Capital Report, broadcasting every Saturday morning at 11 a.m. on AM 1420 The Answer. If you have a question and would like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or contact him through his website, bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
The preceding program has been paid for by Bullington Capital Management, LLC.